Global stocks steady Tuesday as investor risk appetite lifted equities and commodities. U.S. stocks are now on their longest losing streak of 2023, with the dollar falling to a one-month low. And Xi Jinping made his first known visit to the nation's central bank since becoming China's president a decade ago. This momentous visit to the foreign exchange regulator is partly aimed at better understanding China's $3 trillion in foreign exchange reserves ahead of next week's closed-door financial policy meeting to set medium-term priorities for the $61 trillion industry and prevent risks. The visit could help ease concerns among some investors that the president has been neglecting the economy amid a purge of senior ministers and a volatile relationship with the U.S. While the economy has showed some signs of improvement, markets have continued to suffer as investor confidence has plummeted. China watchers are counting on upcoming events, including a potential meeting between Xi and U.S. President Joe Biden at the APEC summit next month. China's yuan strengthened against the dollar to 7.302 at midday trading, not far from 150 per dollar, a level markets believe could prompt Japanese authorities to intervene to prop up the currency. An unprecedented sell-off in longer duration bonds is spooking Wall Street and weighing on equities. The S&P 500 slipped 0.2% at the start of the week as the 10-year Treasury yield hit a 16-year high of 5%. The stock index has corrected to 4,255. A correction to 4,250 could start. The Fed is now signaling to investors that it will hold borrowing costs at their current levels well into 2024 in a bid to kill off inflation, which is still lingering above the central bank's 2% target. Meanwhile, oil prices recovered some of the previous day's losses, but crude futures were flat at $85.48 a barrel, and Bitcoin staged its biggest one-day rally in a year, up another 3 percentage points to 10.2%. The world's biggest cryptocurrency traded as high as $35,198 before easing to $34,151. Investors will be keeping their eyes peeled later today for tech bellwethers Microsoft, Google parent Alphabet, and Amazon when they report their earnings ahead of the Fed's meeting from October 31st to November 1st. And later today, attention will be on U.S. PMI data after the composite PMI remained in expansionary territory in September. Meanwhile, manufacturing activity is also expected to contract at a faster pace of 49.5 from 49.8. Weaker than expected data could pull the U.S. dollar even lower. The data comes ahead of U.S. Q3 GDP figures tomorrow, a speech by Fed Chair Jerome Powell, and U.S. inflation figures later this week on Friday. These events should provide some clues about the future path for U.S. interest rate hikes. In the currency market, the dollar held steady against a basket of currencies after Monday's 0.5% drop. After reaching the local correction target of 1.06 on the euro, a declining movement to 1.05 could form with a downward trend expected. European markets closed lower Monday as investors monitored economic and geopolitical uncertainty. The latest Eurozone PMI data suggests that the economy is heading for a broad-based downturn. The composite PMI fell to 46.5 in October. That's down from 47.2 in September, hitting its lowest level since November 2020. The data comes ahead of a speech by ECB President Christine Lagarde later today and the ECB rate decision on Thursday. The Pan-European Stocks 600 index closed 0.1% lower. Mining stocks dropped 1%, while retail and travel stocks rode a late session boost to finish 1.3% and 1.4% higher, respectively. Investors do not expect the European Central Bank to raise interest rates when it meets this week, but are still prepared for borrowing costs to remain high for the foreseeable future. The British pound sterling is rising after the latest UK jobs data shows the jobs market held up better than expected, despite aggressive hikes from the Bank of England. The British pound sterling has escaped a consolidation range upwards, trading at a 12-day high, reaching the local correction target of 1.22, with a trend downward to 1.208. The dollar fell against the Japanese yen, with the currency pair traditionally high, sensitive to changes in U.S. bond yields, down 0.17% at 149.5 yen after falling back from around the 150 mark. And the Australian dollar enjoyed a slight gain on the weakened U.S. dollar, up to 0.63. And gold holds steady at $1,964.91 per ounce, buoyed by the ongoing Israel-Hamas conflict. This news has been brought to you by VEVOFX. Thank you so much for watching. We wish you profitable trading, and we'll see you soon.